What's up everybody, welcome back to Cilinix Crypto. Good morning, hope you're all doing great, hope you're having a great weekend, and welcome to this new video on Ethereum. Wanted to do a full technical update on that since, well, technically a lot happened. We had a lot of bullish momentum on Friday, but that was followed up with a lot of bearish momentum yesterday in the last, definitely yesterday. Yesterday evening we actually started to find support at this trend line, which I did not think was going to still work, but as you can see, we did find support there together with the support level around 1875. So right now we're in a little bit of a tough situation because technically you could say that we're bullish. All right, technically you could say that because of the trend line and because of still making higher lows and also higher highs. If you take a look at it in a certain way, all right, you could also argue that we're bearish, but doesn't matter. We'll talk about that. We'll talk about what I expect and basically what to look out for, because with that bearish momentum over the course of yesterday, we did get a massive bearish breakout. And basically it looks like this breakout above 1940 and 1920 was some sort of a fake out, but we'll talk about that. Before we get into that though, if you want to receive daily trading signals from me, check out the links down in the description or the pinned comment, and there you will find instructions on how to join. But now on to Ethereum. So first of all, something you should know about next week is that on Wednesday we'll have the inflation rate for the US. So I expect perhaps not that much movement over the course of today and tomorrow. Usually you get quite a lot of movement from like Sunday to Monday. But right now, volume is actually still pretty decent. Volume at this point of time last week was like 50% lower. Well, not that much, but it was at like 4.5 billion. Right now we're at 8.5 billion. So we're still pretty fine. And usually when you have the inflation rate later on in the week, or a big event later on in the week, you do not get that big of a market opening, because usually, as most of you know, Sunday to Monday you have a lot of volatility. I do expect some, but yeah, it's probably a little bit reduced compared to last week, when we were obviously also waiting for the interest rate decision, which is way more important than the inflation rate, but it's going to make us move though. So technically what happened with the moves we had yesterday is that our main resistance level, which has been our main resistance level for the last 2 weeks, between 1920 and 1940, we gave that up as a support again. We barely found any support there. So right now, the market structure as I see it, is kind of like this still, I would say. We're in an ascending triangle, but the ADX is falling below 20, which would suggest that we are no longer trending, and the EMAs are pretty flat. So we're kind of in the area where we are between an uptrend and a consolidation between, that would be 1820, so this level down here, and 1940. So the one thing we're going to see today, which will tell us which one of the two it's going to be, is we're going to test that level between 1920 and 1940. And I'm not going to say we need to break above 1940. That would be quite difficult. It's possible, but in my eyes, and you can also see that historically, you can actually see that we have not broken above 1920 that much. Usually we just spike up to 1940, but we do not break above 1920. So the big thing I think we're going to try today is to break above 1920. If we can do that, which I would actually say that is the most likely scenario. If we can break above 1920, I think we'll take a break retest off of 1900, 1920, and continue our bullish momentum up to, again, that level around 2000 and 2020. At this point of time, I would lean towards this scenario. I would say it's a bit more likely because of the inflation rate and the current bullish market setup. However, if today we are just not able to break above that, and we test that and we drop back down to 1875, then it's probably not going to happen. If it's not going to happen today, it's probably not going to happen tomorrow, and it's more likely that we'll see some weakening down to this level around 1820 and 1800. So it all depends on that level. I mean, right now you could argue in favor of an uptrend, and you could argue in favor of a consolidation given the market structure. So that's what we'll see today. I will keep you updated on it, of course, but for now, thank you for watching. Take care and bye.